Hi, my name is Alex with Gustan Associates at Loan Cabin. We are going to talk to you about getting closing cost credits from the seller or lender credits from us. So when you're buying a house and $200,000 and it's 3.5% down, you're going to need your $7,000, and then you're going to need your closing cost. Let's say it's $8,000. So let's say the lender or the seller can credit you only $5,000 of that, and you have to come up with the other $3,000 closing cost and the 3.5% down, and you're going to come up short. You can ask your lender to give you lender credit. So how it works when a lender gives you lender credits is they have to raise the rate, and then there's a credit for that higher rate, and they give it back to you. So you can use a conjunction of seller credits or lender credits. We always like you to get the seller to credit to you because it's a better deal for you. The higher rate costs more than the increased loan amount. So what you want to do is ask for seller credits to cover all the closing cost credits, and if you can't come up with any more money, then you ask the lender to raise the rate and cover the rest of the credits. And sometimes the sellers won't even credit you at all, and sometimes you have to have the lender credit all the closing cost credits. So it gets kind of confusing there, but just make sure there's seller credits and there's lender credits, and we can only together credit you the total cost and escrows of the loan. We can't credit your down payment. So if you think the seller's crediting you $12,000 and your closing costs are only $8,000, don't be like, yes, I'm going to get a free $4,000 by down payment. That's not the way it works. If you ask for $8,000 or $12,000 in credits and there's only $8,000, they're going to make you reduce that credit, or they're going to do what's called a principal reduction. So they're going to lower the principal on your loan. So, and one of the things you need to know is for conventional loans, you can only get 3%. So on a $200,000 loan, you probably won't be able to get all your closing costs credited, so you will have to reach out to your lender to make up the rest. And lenders can only credit you is the highest rate on the board, whatever that credit is, that's the most that they can credit you. And we can only credit you whatever the closing costs and escrows too. We can't credit your down payment. The only thing that's going to subtract off your down payment is something called tax prorations. Tax prorations are common in states. Some states have large tax prorations, some have small. What tax prorations are is it's taxes that were paid by the seller that they owe you because they're not going to finish living out that part of the time when the tax bill is being used. So basically, it's taxes that they owed for time that you're going to be living there. So, for example, in Illinois, taxes are paid a year late. So when your first tax bill comes out, you're going to be paying for that person's tax bill from last year. So therefore, they owe that to you at the closing. And Illinois is one of the best states for tax prorations. So let's say your tax bill is $7,000. Let's say your purchase price is $200,000. So 3.5% is $7,000. And let's say you ask for a seller credit that covers all your closing cost credits. So your closing costs are paid for. Your 3.5% down is of $200,000 to $7,000, and the taxes for last year were $7,000. The seller has to give you that $7,000. So you walk into the house with no money down, and that's the only time you can do any credits towards your down payment is tax prorations. So there's seller credits, there's lender credits, and then there's tax prorations. So talk to your lender about that. We always like to see you get the seller credits from the seller, and then we'll help you with the rest, lender credits if you need to. And if you're in a state with large tax prorations, that's going to help you out even more. Plus, we have lenders that will use those tax prorations as to offset some of your closing costs. So if you don't want the higher rate, you won't have to verify showing the funds for your closing costs in your account because the tax prorations will offset that. So that's another way of getting around having to come up with all the closing costs if the seller won't credit you all the cost, and nor do you want to take a higher rate from the lender to get the lender credits, the tax prorations credits some of your closing costs. Complicated stuff, but that's why we're here for you. So if you like this video, please like it and share it. And if you got any questions, leave them below. We'll get back to you. Thank you very much.